What's going on, guys? This is going to be a pretty important week for inflation reads. We have CPI, or Consumer Price Index, coming out tomorrow as of this upload, or March 12th. And the trend over the last few months have been that inflation has been elevating. Our last read was a 3%, previous 2.9, previous 2.7. It has been rising. The Fed has been forced to pause as of late. It will be a massive positive sign to see CPI come down for the first reading in quite a while. You'll see that it basically hit a low in October of 2.4%. It was a forecasted 2.3, and from there we continued rising. Now PPI is going to be coming out the following day after CPI, or March 13th, and this too has been rising. And you guys may remember this, but PPI almost hit zero way back kind of towards the middle of 2023. We saw this just fall off a cliff. From that point, it has been basically rising pretty steadily. If these continue ticking up, this will definitely scare the market, make it less likely for rate cuts. And this is a bad mix considering that unemployment has been rising. So it's very crucial to see these numbers coming down. That'll give the Fed the green light for cuts throughout this year. And speaking of the Fed, the first forecasted cut by the Fed Watch tool, I'll leave a link down below for you guys. Basically by June of 2025, the most likely outcome is one cut. But here's where it gets really interesting. You go 1 month forward, go into July, and the most likely scenario here is 2 cuts by this point. And when you get to the year end, you'll see that this is where we are. Basically a snowball's chance in hell that we will remain here. The Fed by the end of this year now is projected to cut 3 times. 1, 2, and 3. And there's only about a 5% difference between 3 and 4 cuts. If inflation shows that it's cooling, I do think there's a good chance that we see this CME Fed Watch tool showing a higher likelihood for even more cuts. But currently, as it stands, we are projected to get about 3 cuts by the year end. In our meeting upcoming here in March, it is basically completely expected that we're not going to get a cut. And again for May, it's basically June where these things start rolling. One thing to think about though is if CPI and PPI come in very favorable, if it drops considerably lower than the estimates, that will basically light the way for the Fed to resume with cuts. Now we do have some interesting news. This was finally officially announced on Cleanspark's investor relations page. Cleanspark stock is going to join the S&P Small Cap 600 index. And as said by Zach Bradford, the CEO, Cleanspark's inclusion in the S&P Small Cap 600 is another significant milestone for our employees, investors, and management team, and is an important recognition of our consistent performance. Our inclusion enhances visibility within the investment community and gives us the opportunity to demonstrate the value of being a pure play, vertically integrated Bitcoin mining company and making exposure to our model more broadly available. Now here's the actual press release from the S&P 600 inclusion. It also says which ones are joining the S&P 500, S&P 100, mid-cap S&P 400, and S&P small cap 600. And here we have Cleanspark's name to replace Wabash National Accord, or WNC. And here are the dates to which they will be added. Cleanspark will be added to the Small Cap 600 Index on March 24. Now looking at Cleanspark's chart, we are getting somewhat of a reaction off of this long-term trend, this trend that we have been riding since the beginning of this bull market. Back at $1.70, we have bounced off this trend multiple times, and Cleanspark has been using it as a support until recently it broke down under it. And also we came up and got rejected from it. Now, as of recently, we're talking about late February, early March, Cleanspark seemed to have bottomed out. We saw an RSI divergence, and the price hasn't gone lower since, despite Bitcoin going lower. That's very interesting. Cleanspark hit a low of 725 back on Friday, February 28. And while yesterday felt like a pretty rough day, it was very rough for Bitcoin, some of the Bitcoin miners as well, you know, it is still higher than it was back here, despite Bitcoin going even lower. The miners somewhat are showing relative strength versus Bitcoin continuing down recently. There's no mistaking that Cleanspark, many of the Bitcoin miners are in a bearish trend, continuing under their MAs. Cleanspark saw a bearish cross on its 50 and 200 MA back in September and has been pretty much paying ever since. When this death cross actually popped up was when we were at about $8, and right after that death cross, funny enough, it did get a little short-term pop. These are lagging indicators. Sometimes we get funny things like that. This is going to be an important month for Bitcoin. This is the month that'll wrap up the quarter for the Bitcoin miners that are reporting earnings. Some Bitcoin miners are guiding for a profit in the quarter ending in March. Most Bitcoin miners expect massive revenue. Cleanspark both expects a profitable quarter and pretty good revenue growth to the tune of almost $50 million. And looking at Bitcoin, Bitcoin hit a new recent low, a price that we haven't seen since, sometime late last year. However, interestingly enough, the RSI has been picking up while the price hit a new low, this RSI has been rising. Now I did want to show you guys that this pullback is getting close to the Mt. Gox pullback that was about a 32% drop. It is not the same in terms of timeline, however. The Mt. Gox drop until we hit the bottom was about 150 days. It was 146 days when we went from 74, 75 all the way down to 49,000, and then it started swiftly recovering. What are we looking at here from the top? Not from the last prior almost top, but from this top. So far we're looking at about 51 days. So this is right around a third of the last pullback that we saw in late 2024, which was in hindsight a fantastic buying opportunity. We get these trends like this where we find a resistance, we consolidate, and then we break out. In my opinion, this is just another instance of it. We had this back in 2023 as well, when we were stuck under roughly $30,000. Look at Bitcoin's clear upward trend. Look how just, wow, is all I can say, wow. There might be some fear if we break this trend. Keep an eye on it. It could be important. But you know, Bitcoin has done this before. We rally, we consolidate, cool down a bit, consolidate, cool down a bit, consolidate, cool down a bit. Boom, next leg up. Boom, next leg up. Hopefully this time, boom, next leg up to 150,000. One thing's for sure, whales have been buying. While retail runs around like chickens with their head cut off, whales have been steadily accumulating Bitcoin. On-chain data shows that large investors and traders, particularly whales and sharks, continuing to add Bitcoin. Their modest dumping between mid-February and early March played a part in the most current crypto drop. The recent rise in accumulation is seen among wallet addresses containing more than 10 Bitcoin, showing renewed confidence in Bitcoin's future performance. In the last 6 days, these whales and sharks have purchased about 4,800 Bitcoin. They have been adding to their holdings even as retail traders show heightened fear and panic. And given this recent news, sentiment thinks that this month can perform better than the previous two. Prices have not reacted to their buying just yet. Don't be surprised if the second half of March turns out much better than the bloodbath we've seen since Bitcoin's all-time high 7 weeks ago. We also have had M2 rising significantly. Many of you know Bitcoin tracks M2 to a very high degree. And you'll see that M2, this is a 10-week lead. Bitcoin typically lags behind as the money flows into the market and gets dispersed. You'll see that we just saw Bitcoin have a pretty drastic pullback. M2 global supply has seen a pullback. As of recently, it has been rising. Now Bitcoin is set to do the same. It has just gotten through M2's pullback. Bitcoin has pretty much done similarly there. And next is the delayed effect of this M2 pumping into the economy, pumping into hard assets like Bitcoin. But what do you guys think? Do you think we're going to continue to have a horrible 2025? So far, it hasn't been great. Following the cycles, this is the most bullish year. So far, it hasn't been that. But how are you feeling about the alts, about Bitcoin miners? How are you feeling about mega caps? Stocks like Amazon, stocks like Tesla. Tesla had a pretty hard drop. In my opinion, those are starting to get attractive too. And I'm really hoping that we can rotate out of some Bitcoin miners, out of Bitcoin, and into some of these large mega caps. But how are you feeling as of late? How are you feeling about upcoming CPI and PPI? And how are you feeling about last week's jobs data? The market really needs CPI and PPI to come down to give the Fed the green light to actually cut rates so we can hopefully achieve that soft landing. Inflation coming up makes the soft landing that much harder to grasp, brings even more worry, which is what we've been kind of seeing lately because of employment numbers. But anyways, thanks as always for watching, guys. I will see you on the next one.